So we're down about 370 points in the Dow. You want people to watch 2:45 p.m.
Well, it's early. I mean, now let me explain what I talk about. Now, see, now Europe closes, and this morning Europe closes. When Europe closes, that takes a lot of pressure off our stocks, and then we have a second wave of selling from 1 o'clock to 2 o'clock, which is margin selling, people raising money to sell, and then at 2:45 we get people who have very good looks at the book to see how much there is to buy. So 245 is often a make or break level. And then there's 330, 331, which is when the buybacks end. So all of those are crucial hours to watch. I always tell people that when you're down this much at the opening, there are a lot of stocks that are still going to get hammered, not to buy the opening, which was the correct thing to do. And take a look at 10:30 when I really feel a lot of the pressure will be off. But understand that it's a long day. And you never want to jump on a long day because there's too many firms knock stocks down and they're selling and then nail the close at the low.
All right, Jim, a bigger issue than taraffs, baseball attendance is down.
Aramark, this is a very, well, obviously Scott's being facetious. Yes. Aramark is a way to play the weak attendance in baseball. Now, some of it could be weather, but the numbers are down badly. And Aramark's stadiums are down badly, so be careful of that stock. It's a very good company. But it turned out to be more levered to baseball than a lot of people thought.
Is it also maybe because of the stay-at-home economy that you talk about? People are at home watching Netflix. Maybe they're not going to as many games.
I think baseball's lost a degree of its relevance, and that's I think what's at stake there, because the Astros are good. They have plus 20%, but there is a belief among people in the league that it's so across the board that it has to do with a belief of their relevance to the game. Happened to horse racing, happened to hockey, so it could happen to baseball.
Jim, last night on Mad Money you talked about Coupa, Okta, Zora, and how they're getting expensive.
Maybe I've got a series with a sort of nice Mad Money recap of the companies that have come public in the last year that are involved in a lot of internet, and there are ones that you want to watch today because there are buyers underneath, and they're very expensive. And I want to see whether they can hold under the pressure of selling today.
You also interviewed the founder of a private company, Olo, as an alternative to Grub Hub, essentially.
Right. Now, Grub Hub is up a great deal. And I think that Grub Hub is up because of the stay-at-home economy. Grub Hub does have a problem getting enough delivery people. I think the stock's had too big a run.
And I think there are 50,000 restaurants that it's in, but the runway could be a total of 600,000.
But Grub Hub has got more. Grub Hub is a concern to me because Olo's private, can't really do anything.
Jim, who do you have coming up on the show tonight?
I have Optinos, which has a very comprehensive spray way of delivery, and I have Carrizo, which at the low bought a company that diversified them out of the Permian. They're geniuses. The stock's doubled.
Okay, Jim, we're going to continue talking about stocks in our ActionAlertsPlus.com video. Please join us there.